You're now listening to the Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Brought to you by Kaishax, helping you deliver through volatility.
Hello, everyone. Good morning. You're listening to the Supply Chain Secrets Podcast. I'm your co-host, Caroline, and with me is Lars Jensen. Lars, how's it going?
Going absolutely great. I'm sitting here in sunny Belgium, day 7 now of my synchronous voyage. Just half an hour from getting to Waterloo, the place where Napoleon lost to the Brits a bit over 200 years ago.
A little historical trip. Nice. I'm a little jealous that you're sitting outside. It looks really lovely. Maybe I should take the recording out on the patio. All right, let's get started talking about the latest on NiFi rates. Let me share my screen here. So let's kick off starting with Asia to US West Coast. What are the rates looking like this week compared to last week?
Yeah, we're beginning to see an interesting pattern unfold here because if you look at the rates, they're basically flatlining. So we are basically at the same level, around $5,200 per 40 foot. That's unchanged. But what indeed has changed significantly is the rate level for the futures. Because for the futures, we see a significant jump upwards. Now, when I say futures here, I mean for the July contract. So that is actually for the month we are looking at. And on that one, we saw a jump by $700 up to $4,300. But, and there is a but to this, even though the futures rate jumps upwards, the market is still in backwardation, which means that the future rates ahead of us are significantly below where we are right now. And given that the first NiFi index came here actually in the very first days of July, if you then think that one through and say, if we look at all of July, if the average has to drop down to the level we now see for the future, and we are already above, then logically, the rest of July should actually be even below this futures rate for the math to work out, which means that we should actually see for the rest of the month an average of just 4,100. Given that rates are unlikely within the next few days to jump from their current level above 5,000 all the way down to 4,100 in one go, we might actually see rates drop below $4,000 towards the end of July if the stakeholders involved in the futures market are correct in their assessments. And you can say this basically supports what we have also been talking about for several weeks, that it appears there has been a stampede to move cargo into the US, which has pushed rates up very rapidly, but it might be a somewhat short-lived spike. I know we've been talking about it before. If we look at the spread in the rates, the spread also remains very large. It's almost $2,000 spread between the 10% and 90% the brackets of who's paying how much in the Pacific markets, again, indicating a very unsettled market. So all in all, when at the US West Coast rates, I still see all indications points towards this might be a somewhat short-lived peak, and it is about to run out of steam.
There is still the chance that potentially the futures rates could also increase too, like we have seen over the past few weeks.
Absolutely. Let's be honest here. Futures rates are not a crystal ball. It's not necessarily the correct forecast. It simply exemplifies the level where the various stakeholders involved in the futures market see the most likely outcome to be. So that can certainly also be adjusted upwards. But what this tells us is stakeholders, and this will mean both the buy and sell side, apparently right now, don't necessarily expect this peak to be long-lived. We can also look at the futures rates once we get into August. They were also adjusted upwards this week, but still even below the levels that we also see for July. So we get below $4,000 there. So the expectation is for this peak to taper off relatively short. Now, if we switch our attention from US West Coast, we tend to always talk about US West Coast on the Pacific. If we go to the US East Coast rates instead, basically we see exactly the same pattern unfold. We see a flattening out of the spot rates. We see an increase in the futures rate, but the market still remaining significantly in backwardation, with this expectation that we are basically at the apex of the peak right now, as we see it. Maybe one thing that would be good to throw in here for those that have been on our podcast all the way since we started last year, they might have noticed on some occasions we talked about what we call phantom TRIs. Because we, of course, talk here about what happens on the NIFI rates. And for those that may not be fully aware, that measures rates literally for cargo that has been loaded on board the vessel. So you're absolutely sure these rates are actually being paid by real cargo moving on real ships. Some other indices to larger or smaller degrees also involves rates that have been quoted, but that might not necessarily result in a booking, or rates on cargo that has been booked, but eventually might not appear because shippers find better deals. So what we saw several times, multiple occasions last year, is exactly what you could call phantom TRIs. You saw some of the more volatile freight rate indices spike to extremely high levels and begin to disassociate from the rates actually being paid. This was short-lived and basically happened whenever you were at the apex of the market, and it was clear the carriers were trying to push as high freight increases as possible, and eventually that game comes to an end. And when you're looking at what's happening in the market, it might not be right, but at least my gut feel for now also tells me that this is the kind of territory we're entering into on the Pacific.
Yeah, seems fairly likely. Let's also shift and talk a little bit about the Asia-North Europe rates as well.
Yes, because Asia-North
Much
Europe
closer.
It's much closer and it's a very much different story than what we have on the Pacific. Has been for weeks. Rates still continue to increase, but this has not exceeded the futures rates very much. We're only marginally above where the futures rate for July is. Technically speaking, we're above by a fraction of a percentage here. So technically, you could say the market is in backwardation, but for all intents and purposes, spot rates are now actually more or less at the same level as where the futures rate not only is, but also has been for several weeks. We also see the futures for August still remain quite elevated, but with a slight drop down compared to where we're likely going to be here in July. So the story on the Asia-North Europe is still the same as we've seen for weeks. It appears we here have a market that is driven by a much more broad-based, strong peak season. It's not just a rush job. It's a peak season where we are approaching the apex, but the apex is not going to be short and sharp. It appears that the peak season on Asia-Europe could actually last quite a while longer, and only begin to taper off quite a bit into August as it looks right now. There's also not the same sense that we're beginning to see a disassociation due to phantom TRIs, at least while it's not yet when we're looking at the market. So the story here in Asia-North Europe is certainly one of a much deeper level of strength than what it would appear we have over on the Pacific trade.
Awesome. Thanks for walking us through that. We've got a lot of different topics, so we'll talk a little bit about each of them. Let's start today talking about Maersk and their earnings report.
Yeah, I think maybe quite a few were caught by surprise earlier last week when Maersk suddenly announced they have increased their earnings expectations for 2026. And basically the expectation is, if you look at the EBIT level, to make between $2 and $3.5 billion more than what they assessed just a month and a half ago. When you dig a bit deeper into the numbers, in every one of these reports, in the quarterly earnings reports, Maersk always put in a sensitivity guidance. So if volumes change by 100,000 FFE, this is what it does to the EBIT level. If rates change by $100, and if you use these sensitivity guidelines that they put out, it appears clear that this is basically rates driven. It is driven by freight rates being much stronger than expected. They have also increased their assessment on volumes for the year. Their previous guidance was 2 to 4% volume growth in the market this year. That's now 4%. Technically, it is within the range, but in the higher range of it. I wouldn't say that is all too surprising, but it is definitely an illustration that the market has come out a lot stronger than what Maersk expected. I'm deliberately not saying that the market overall is a lot stronger than expected, because I think we did have a podcast quite a few months back where we also were looking at how different the different carriers were looking at their earnings expectations for 2026, where Maersk appeared to be in the more pessimistic end, with some other carriers being on the more optimistic end. So it seems as more Maersk that are now adjusting in towards what some of their more optimistic competitors potentially have already calculated with.
Yeah, interesting. So it's not necessarily an indication of a stronger market, but maybe a revised view of their own expectations given what's going on.
At least to some degree, yes.
Okay, interesting stuff. All right. What's going on with the Strait of Hormuz? Do we have any updates there? Anything the viewers should be aware of?
We actually do. And let's start with the boring part. Sorry, on here, but the boring part is nothing has really changed compared to last week. The Iranians are busy burying their former leader, so nothing is really happening on the political, which also means no change in the overall situation. Still have some vessels going back and forth. We still mainly for container vessels have no traffic, more or less, through the Strait of Hormuz. We have also, over the last week, seen a couple of pirate attacks in the Red Sea. We actually had one yesterday on Sunday with a bulker vessel being attacked by pirates. No details at this point as to what may or may not have happened. But the real surprise actually came within the last few hours. There was an announcement made by Maersk and Hapag-Lloyd, so the Gemini alliance, that their AE-15 Asia-Europe service is not going to be swapped back to Suez routing. This is basically, at least that's what it looks like for now, Maersk and Hapag-Lloyd rekindling the plan that they were beginning to implement back in January and February, so half a year ago. Remember, prior to the Hormuz crisis, they were slowly beginning to switch some of their services back to Suez. We now see them begin to do exactly the same thing. Now, what does this mean for the Strait of Hormuz? It doesn't necessarily mean that the Hormuz crisis has been resolved. For now, I'm not seeing these carriers put new vessels into the Persian Gulf. But it does seem to allude that Maersk and Hapag-Lloyd are sufficiently confident that the Hormuz crisis will not blow out of proportion again, leaving the passage through the Red Sea more safe, and therefore they're now beginning to revert back. Will other carriers follow suit? That, of course, remains to be seen. It is a balancing act. It is tempting to shift more capacity towards the Suez routing, especially now where we actually, as we talked about before, have a very strong peak on the Asia-Europe market. And furthermore, more still with some of the Middle Eastern cargo not going to Persian Gulf, there's a strong incentive for the carriers to switch some of their services to an actual Suez routing. The downside is if they do it too rapidly, we run into this scenario of significant congestion issues in European ports. For now, it's one service changing over slowly, but it definitely warrants monitoring whether this is a trend that will continue. Seen from the perspective of container shipping globally, this is decidedly good news because this could be an indication that finally, after more than 2.5 years, we might be on a path towards normalization in the Red Sea. For those that heard me start out by saying there was a pirate attack yesterday in the Red Sea, so hang on a second. Why do they go back when they got pirate attacks? The pirate attacks typically happen towards somewhat smaller vessels, not towards the ultra-large container vessels. And carriers have to some degree been used to dealing with pirate attacks. It's not a nice thing to deal with, but sending some of your ultra-large vessels through the Red Sea, they are not the most opportune targets for the pirates to go after.
Right. Just to clarify, the vessels that Hapag and Maersk are now going to be sending through the Suez, will that be going both directions? I know previously we spoke about CMA only doing the backhaul going through the Suez.
Yeah, that is a little bit unclear, or maybe I've not misunderstood when I read it, but it appears to me it might be in both directions, but I'm going to have to look up a little bit more details. As mentioned, this is pretty fresh at the point where we're starting this podcast.
Definitely good news for shippers, and it's nice to see things going back to normal rather than staying with our new normal, which is just to avoid it
Yes.
altogether.
We need all the positive
Awesome.
news we can get.
I agree. All right, let's talk a little bit about the Panama Canal. So we have some concerns about El Niño and the effect on the water levels. So what's been happening there?
Yeah, we talked about that before. There is now an official El Niño, and if we get a very strong El Niño, there's a high likelihood of problems with enough water in the canal at the end of this year, coming into 27. A few weeks ago, the Panama Canal authorities did a draft restriction on the largest vessels that can go through, the Niño vessels. So they reduced the draft to 49.5 feet. Would probably impact only 1.5% of the ships going through. But what they have now announced is further draft restrictions. So we go from 49.5 to 49 feet here later in July, then down to 48.5 feet when we're a week and a half into August. And I see this as basically a prudent approach from the Panama Canal authorities. The reason they make draft restrictions is because that way they can also conserve water. They need less water when you have less draft every time they move a ship to the canal. So this is clearly an effort to try to conserve as much water as possible, recognizing there may actually be an issue. Also keep in mind, it's not a guarantee. These are weather forecasts. It might be the problem is there's a high likelihood of a strong El Niño, but it's not a certainty. But these steps now being taken by the Panama Canal authorities, they are clearly prudent, and they will begin slowly to have a minor impact on the amount of cargo some of these large vessels can actually take through the Panama Canal. What will that mean for shippers? If you look back a couple of years when we had the same situation, that basically translates into higher surcharges. And it would appear on that front that CMA CGM is also acting rapidly because they have already announced an increase in the Panama Canal transit charges. That one, as far as I can see right now, they appear to be charging $40 per TEU. That will be going to $320 per TEU. Given we don't have massive draft restrictions yet, that seems that CMA CGM is simply out early trying to push Panama Canal transit tolls increases already.
Lars, I'm curious to ask you, how severe could this get? Looking historically at what's happened, is there an option where it just closes completely? Is that highly unlikely? What can we look back at?
It is a good question because when we look back, keep in mind, we have only had the new set of locks in operations for a decade. And that's where we have the Neo-Panamax vessels. These are the new set of locks that uses a lot more water than the old set of locks. If you look at weather records going back decades, we've had multiple other drafts, but that did not impact the Panama Canal as severely, precisely because you had smaller ships, you didn't need as much water to operate the Panama Canal. So we don't have that much in terms of track record for the ultra-large locks as we have right now. What we are also potentially facing is there is a likelihood, again, certainly not a certainty, but there is a likelihood that this could be the strongest El Niño on record. What that will mean to the water levels in Lake Gatun is also something that remains to be seen. Will we see a complete closure? No, I would find that fairly odd. Can you see significant restrictions? Yes. Can you see more restrictions than we did back in 24? Potentially, yes, if this gets as bad as the weather forecasts come up with, which again, if we remember back to 24, shippers paid higher fees. Some cargo was rerouted going to U.S. East Coast. And at that point in time, you even had some vessels moving cargo between East and West Coast South America going south. So shouldn't be scaremongers here and say, oh my God, everything is going to go absolutely belly up on the Panama Canal. I think the baseline should be we should expect more capacity restrictions, which means higher prices. There's going to be somewhat less cargo, but it's also not a doomsday scenario that we should expect, at least from what we're looking at right now.
Yeah, definitely not anywhere near there at this point. But it is interesting to think about, especially for those that are maybe newer to the industry. I'm kind of surprised to hear that, like, when they did new locks for the canal, that they require more water. I guess maybe there were other benefits, and that's why it was implemented.
Yeah, the benefits clearly are you could move the Neo-Panamax up. Before that, if you look from container ships, the largest container vessels that could go through had a capacity of roughly around 4,800 TEU. Now you can take 15,000 TEU vessels through, which of course is a massive step up for the history buffs out there. When the Panama Canal was originally designed, the original designer had a plan for much larger locks. And the builders and the guys who were paying the party said, absolutely not. You've got to be crazy. Nobody ever needs locks that big. So they built the locks that we had until a decade ago. The new locks, they are roughly the size that was proposed more than 100 years ago for the first set of locks.
Man, that guy had some good foresight.
Oh, yeah.
Cool. All right. So let's switch gears and talk about tariffs and specifically USMCA. So maybe a quick, what is that for our listeners and what's going on there?
Yeah, the USMCA is basically a trade agreement between the US, Mexico, and Canada. And very quick prehistory, it used to be called NAFTA. Then under the first Trump administration, NAFTA was then canceled because that was apparently not a good deal. The Trump administration then negotiated a new trade deal. That's the one that became the USMCA. And over the last week, the Trump administration, in its second incarnation, apparently believes that USMCA is now a bad deal and have indicated they will not continue that one, but might over the next decade do various bilateral agreements slowly with Mexico and Canada. That's the extent of what we know. As things are with this administration, it might mean that nothing changes in USMCA and this is all just talk. Or it might be that whatever trade relations are in place with tariffs right now between US, Mexico, and Canada could change from one day to the next. It simply adds to this uncertainty that we're heading into, also where the Section 232 tariffs are about to expire, and we also don't know what's going to come in. So it is another stick in this pile of uncertainty related to the US tariff regime.
So if the US does not renew and things have to change substantially, which supply chains are the most exposed and affected by it?
Oh, that is I can't off the top of my head remember it, but you have the very intertwined. Not that it's the only one, but one thing to think about is if you look at the auto manufacturing, for example, you have supply chains between US and Canada that are very heavily intertwined to the point where you have automotive parts that tend to move back and forth the quarter multiple times, where you then do value add in one country, move it to the other one, do value add, and move it back and forth. So stepping out of the USMCA would have significant repercussions for those supply chains as well.
Okay. We'll keep an eye on that and report on updates as they happen. The last thing that we were going to talk about today are emissions and some trends that we've seen. Could you talk us through what the latest is?
Yes, so this is not global emissions I'm talking about. It is specifically European emissions, so emissions measured in the EU. Because for years now, the European Union have had this reporting scheme put in place called the MRV, where all shipping lines every year needs to report their total emissions related to the EU. So that means for ships moving between EU ports, but also for ships coming from ports outside the EU into the EU and vice versa. It does not cover emissions on ships that don't call the EU. So it's EU shipping emissions. And once this is reported, then every year there's also a massive database release that was released now in the week that just went by. And if I look at the container vessels, there's a couple of interesting trends here to pick up on. If I look at container vessels in 2025, emissions in the EU went down 2.5% compared to the year before. So we have a reduction in total emissions. But of course, from 24 to 25, volumes moved in the EU to and from the EU into EU increased. So if instead I calculate emissions per TEU, we actually see emissions now down 6.7% compared to 2024. If you are looking for emissions reductions, this is most certainly good news. But there's a caveat we need to remember here, because from 2023 to 24, emissions increased dramatically because Red Sea crisis. So suddenly going from Asia to Europe required a massive detour that burns a lot more fuel. So if we look at that one, if you look from 2023 and on to 2025, so if we look over the last 2 years, container vessel emissions are actually up 48%. If I compare on a per TEU basis, so on a per unit basis, emissions are up some 35%. So emissions compared to 23 are, of course, up dramatically, but that has been entirely out of the hands of the shipping lines. That is the Red Sea crisis. If we look at what was under the control of the carriers and compare 25 to 24, the carriers have, as I mentioned, reduced emissions per TEU actually by 6.7%. Another comparison we could do, if we just look at total emissions, as I mentioned, container vessels are down 2.5%. If I look at the basket of all other vessel types, so it's tankers, bulkers, everything else, they actually increased their total emissions by 3.6%. So if we look from 24 to 25, container vessels have reduced total emissions. Rest of shipping have increased total emissions.
Is it fair to say that the reduction is due to, over the past 5-10 years, we've seen emissions laws and the need for scrubbers? Is it due to that?
No, that might be part of it, but truth be told, many container lines have for years been pursuing lower emissions. And one of the reasons why they have been pursuing lower emissions is very straightforward. If you save fuel, you also lower emissions. And carriers clearly have a vested interest in also lowering their fuel consumption. So overall, you can say, from an emissions perspective, this is indeed positive news. And if we link it up to what we talked about earlier, final signs that we might gradually begin to see a normalization of the Red Sea, that would also work wonders for the emissions for the container vessels, because that would do away with this increase we saw due to the detours around Africa.
Yeah. All right, cool. It's nice to end on a positive note. Lars, I also want to ask you, what are you excited about this week?
Oh, I am excited about continuing on my journey. There's still a few places here in Belgium I want to get to, and then I'll be heading down into France and into Brittany. So I'll probably be on the seaside in Brittany for our podcast next week. Looking very much forward to that.
You'll continue to make me jealous with your cool adventures while I record from my office in my house. But all right, cool. Thanks for joining us and giving us all the updates. If you haven't already subscribed, we're on Apple Music, Spotify, YouTube. We also have a recap newsletter, so if you don't have time to listen to the podcast, you can just get the summary to your email. The link is in the show notes. Thanks everyone for joining, and we'll talk to you next week. Bye, y'all.
Thanks for listening to the Supply Chain Secrets podcast, presented by Niño. Be sure to subscribe on your favorite podcast app.